since, let's say, 2021? Gold. Silver is much higher than it was in 2021. Gold is a couple $100 higher than it was in 2021. Okay, so those asset categories will attract further money flow out of those evacuating the stock market. So to some extent, if you're in gold, start to watch the stock market again, because if we see a sign of rollover, it's beneficial to gold.
Michael Oliver, the CEO of Momentum Structural Analysis, highlights crucial momentum and price levels for gold and silver and provides valuable price targets if these levels are surpassed. With his optimistic stance on gold and silver, Oliver foresees unprecedented highs for both precious metals in the near future. According to Michael Oliver, the crucial price levels to watch for silver and gold are $26 and $2,100 respectively. Breaking through these levels could potentially trigger a surge in the prices of these metals, as investors are already showing interest in gold and silver. Oliver's next price targets are $2,400 for gold and $34 for silver. Several factors contribute to his optimistic outlook, such as increasing inflation and central bank monetary policies. Michael Oliver expresses strong confidence in his predictions, stating that gold and silver are currently in the initial phases of a significant bull market. Analyzing the past 50 years, three significant bull markets in precious metals, Michael Oliver observes a consistent pattern of a 7 to 8-fold nominal surge in gold prices from the primary low to the major high. In the current market scenario, Oliver points out that gold has made 3 previous attempts to surpass its all-time highs, indicating that the fourth upward trend is gaining strength and is poised to reach new record levels. Oliver predicts that the price movements of gold and silver will become even more significant once they surpass certain key levels. Stay tuned as we provide you with footage from the engaging debate.
Gold was in a range from 2020 summer high, 2022 high, and recent highs, sort of a flat range. Silver was in a slightly downtrending channel. I'm talking price now. Silver burst through that channel earlier this year, especially by March, was very evident. The pullback is basically dancing on top of that channel. So even from a price chart perspective, this pullback is a pullback in now what is an emergent uptrend. Okay. Momentum, we measure all kinds of time scales: annual momentum, quarterly momentum, monthly, weekly, etc. What has been going on since basically March in gold and silver has been repeated selling in those markets that has really not produced much downside. In other words, if you've been short gold, let's say not at the exact top tick of the rally, but let's say around 2000, well, you're making 20, 30 bucks, and it's been several months of selling. So even from just a price chart point of view, if you're a bear, consider that. Okay, if you're a bull, consider how the bear feels. He doesn't feel real great. He's not really making a lot of money. And in one good day, we could blow him out. Okay. Gold has set a triple top on a price chart. If you keep pointing figures, X and O charts, $50 by 3-block reversal, you've got 3 highs at 2050, 2050, and 2050. That's 2020 high, 2022 high, and a recent high. None of them touch 2100. Okay, so you're sitting there on this point and figure chart at a triple top. After having blown out a triple bottom in last summer and fall, falsely, we said it would be a false price chart breakout. Sure enough, it was. You had repeated lows at 1700. We went down to 1650. Now, when you have that kind of box on a point and figure chart, if you're just a point and figure guy and that's your universe, if you have a box like that and you blow out one end of it and it's a trap and you go back to the other end, it won't be a trap. It'll be a valid breakout. So when you hit 2100, there's a whole bunch of people going to say, oh, golly, I missed it. I better get in this. Okay. Our number on silver, its old high in 2020 was 30 bucks. It made a high in that March 22 rally when gold was back up to its high. Silver wasn't. Silver was up in the highest weekly close was like 2610. Again, this is March of last year. We came back up again above 26 recently and pushed and pushed and pushed. They couldn't get through there. And then they backed off into the low 23s. Right now we're in the low to mid 24s. We argue if you get back over 26 again, watch out. They're going to blow your head off. And the same with gold touching 2100. So those are numbers we'd watch if we wanted to have a larger position or if we're not positioned in those markets. You see 2100 gold, It's a breakout. It's valid. You see 26 plus silver, watch out. That's the point at which when you go through those numbers, we think those two metals will then move from an arm wrestling upside move to something more explosive.
According to momentum analyst Michael Oliver, the stock market bubble experienced a significant downturn in early 2022. For those anticipating a resurgence in stock prices following a pause by the Federal Reserve, Oliver advises against placing bets on it. He suggests an imminent shift in market dynamics that could prompt asset managers to gravitate towards precious metals as a preferable investment option. On May 26, the broad-based index achieved a significant milestone by closing above the 4,200 level for the first time since the market experienced a sell-off and declined sharply to reach a low of approximately 3,577 in October of the previous year. The S&P 500 also concluded the previous week on a positive note, with a notable 1.8% increase, reaching around 4,282. This upswing represents the index's most substantial weekly gain since late March. According to Oliver, there is an inverse relationship between gold and stock prices. When gold prices decline, stock market prices tend to rise. Historical data indicates that during periods of pessimism in the stock market, gold performs exceptionally well. Analyzing the past 50 years, there have been several bull markets for gold and silver.
Stock market's a different issue. While gold has been pulling back over the last several months, not much, but the stock market has been pressing upward. Again, not much, especially if you look at the S&P. We nipped out some highs recently, last week above 4,200, got up to near 4,300. That took out some prior highs, but marginally, and we're just spinning our wheels up here. I know everybody's anticipating that if the Fed pauses, oh boy, stock market's going to party. Don't bet on it. If you take a Fed funds chart and go back through history and look at what happened up to 2000, the year 2000, the dot-com high, the Fed had been raising rates. In early 2001, they started to cut rates. Did that save the market from a bear market to the 2002 low? No. They cut rates all the way down. The market went down anyway. 2007, they've been raising rates all the way up to the 2006, 2007 period, and rates peaked, I think it was at 5.25% Fed funds in the summer of 2007. They actually started cutting rates while the market was still at its highs. That's above 1,500 S&P. And all the way down to the bear market low of 2009, the Fed cut rates, but it didn't save the market. So those who are hopeful that if the Fed pauses or maybe ultimately starts lowering rates, that'll help the stock market, don't bet on it. History's not on your side. And I think that's probably important for gold because asset shift will occur. And if you go back and look at the history of gold over the last 50 years, there have been a couple bull markets that were eightfold moves. Okay, the routine, eightfold. Well, our low was 1,050. What's eightfold? Okay, $8,000. Okay, ultimately, it wouldn't shock us that we do another, quote, routine move in gold. But the fundamentals out there, the economic, political background is, we think, historic. And we think the wave effects for gold and silver could be far more dramatic, and also more chaos theory. Instead of incremental, more rapid. And I think the rapidity is about to begin once we cross those numbers I just mentioned in gold and silver. So fasten up. Okay.
Gold and silver prices are currently showing a slight downward trend. However, retail traders are displaying growing bullish sentiment towards these precious metals. Although silver and PM mining stocks have trailed behind gold's recent movements, Michael Oliver anticipates a potential shift in sentiment towards a bullish stance in the sector. He predicts that once this shift occurs, silver and PM mining stocks will surge upward rapidly, outpacing the upward trajectory of gold and exhibiting significant outperformance. We invite you to share your thoughts in the comments section. If you found this content valuable, please give it a thumbs up and subscribe to our channel for the latest news and videos. Thank you for watching.